The Nightly Business Report.
Good evening. Tonight, Sri Lanka's tourism sector experiences a major challenge due to extended delays and inefficiencies at Bandaranaike International Airport as a result of the new on-arrival visa system. Indigo, a key Indian airline, commences their flight operations between Chennai and Jaffna, with the inaugural flight arriving to the Jaffna International Airport yesterday. The ongoing negative sentiment at the Colombo Stock Exchange shows no change at the start of this week, with today's market session ending in a downturn. And Shell plans to reduce its oil and gas exploration and development workforce as part of a cost-saving initiative following significant cuts in its renewables and low-carbon businesses.
From Studio 24, here's Anuradhi Vikramasinghe.
A very good evening and thank you for joining us. Sri Lanka's tourism sector is experiencing major challenges due to extended delays and inefficiencies at the Bandaranaike International Airport, the country's primary airport. Tourists and returning Sri Lankans have reported long queues, slow-moving lines for visas on arrival, and unhelpful service from immigration officers. These issues have led to a noticeable decline in daily arrivals and have significantly impacted the country's economy.
The Sri Lanka Tourism Development Authority reports that daily visitor arrivals have significantly dropped around 6,000 to 2,000 since the 18th of August. Industry feedback indicates that the country may have missed out approximately 40,000 potential tourists last month alone, resulting in an estimated economic loss of $120 million. Despite these concerning statistics, there has been little action from the immigration authorities. Sri Lanka has not yet returned to its previous system for visa approval and issuance following a Supreme Court order suspending the VFS-led system. A senior official mentioned that attempts to engage with the Controller General of the Department of Immigration and Immigration have been ongoing for over a week without success. He also noted that Sri Lanka Tourism, in collaboration with the Tourism Ministry, has been advocating solutions, including the straightforward measure of increasing the number of on-arrival visa counters. This situation has drawn criticism from both industry stakeholders and travellers, who have pointed out the stark contrast between the warm welcome Sri Lanka promises and the indifferent reality faced at its main airport.
The Sri Lankan rupee has been the best performing emerging market currency as at the end of August, which is last month, with a spot return of 8.21%. This is according to Bloomberg market data. Accordingly, the rupee has been best performing emerging market currency so far this year, while holding the title for 5 consecutive months since March. Analysts expect the exchange rate to be in the range of 295 and 305 rupees per US dollar in the second half of this year, and between 305 and 315 rupees in the first half of next year. It's expected that with the slower than anticipated recovery in the economy, coupled with election and policy, will put the exchange rates in the above mentioned ranges. Also, economic recovery and consumer demand may influence some depreciation towards the first half of next year. The Sri Lanka Ports Authority has addressed recent concerns regarding a perceived decline in transshipment volumes at the port of Colombo, which some attribute to the expansion of regional ports in India. Meanwhile, the SLPA chairman Keith D. Bernard recently said that the port of Colombo is set to enhance its productivity and efficiency in global port operations by adopting advanced port technology and automation.
While these regional ports are often viewed as competitors, the SLPA emphasizes the importance of collaboration within the industry. The authority, along with all the terminal operators at the port of Colombo, acknowledges the benefits of neighboring port expansions, which can help meet the evolving demands of the market collectively. According to the SLPA, the fluctuations in the transshipment volumes should be interpreted with the broader context of global supply and demand dynamics that impact ports worldwide. Seasonal changes, coupled with global economic and social factors, have led to a temporary decline in cargo handling, not just at the port of Colombo but at various international ports as well. The SLPA clarified that this situation is not a result of increased competition, but rather a common occurrence within the maritime industry. In a positive turn, the Colombo port has shown impressive growth in container handling for this year, indicating a significant improvement in operational performance. Recently addressing a gathering last week, the chairman of the Ports Authority, Keith Bernard, outlined several technological initiatives aimed at improving the port's operation and logistic capabilities. These include implementing state-of-the-art smart terminals, advanced terminal operating systems, a port community system, a vessel traffic management system, and a megaport radiation detection system.
Sri Lanka's current foreign exchange earnings from exports, gross services and remittances rose to $2,362 million in the month of July this year from $2,003 in June. According to official data, this exceeded imports by $619 million.
Imports also rose to $1,743 million in July this year from $1,446 million, with investments, good and base metal imports picking up to $401 million from $258 million in the previous month. In intermediate goods, textiles and textile articles rose $279 million, about $233 million from last year, with intermediate goods rising $1,066 million from $974 million. Sri Lanka's gross services inflows were reported at $664.9 million, with tourism estimated at $323.3 million and computer services of $93.1 million. Travel abroad was reported at $75.1 million compared to the $11.3 million last year. Net services inflows was $374.6 million.
Let's take a short break now. Let's see how the stock market started off the week right after this. Welcome back to the Nightly Business Report. The persisting negative sentiment at the Colombo Stock Exchange makes no difference at the beginning of this week, as today's market session came to a close, marking a downturn. Both the indices concluded today's session in the red, showing no signs of recovery for the past weeks. To get the summary of today's market performance, we now connect with Anjali Matthews from First Capital Holdings.
Thank you. So today, the Colombo Stock Exchange continued its downward trend for the 11th consecutive day, and the market was driven by sustained volatility and political uncertainty, continuing the bearish sentiment of the previous sessions. The all-share price index reached its lowest level since March 2024, closing at 10,720, losing 150 points and marking a 1.38% decrease from the previous day. And similarly, the S&P SL20 index also saw a decline, closing at 3,007, losing 52 points and declining by 1.69% from the previous day. And as investors maintained a cautionary stance amidst political uncertainty, the main negative contributors towards the all-share price index were Commercial Bank, LOLC Finance, Sampath Bank, Hatton National Bank and John Keel's Holdings. And as low sentiment persisted, turnover stood at rupees 615.8 million, marking a 19% decrease from the previous day. The top gainers of the day include Mala and Phipps, Bamsay Royal Resorts Hikkaduwa and Vidulanka PLC, while the top losers of the day include HVA Food Rights, Industrial Asphalts PLC, and Blue Diamonds Jewelry.
Will the negative sentiment at the Colombo stock market continue, or can we expect a change in the coming days? Well, to gain insight, we turn to Zaima Jihan from First Capital Holdings for her analytical opinion.
Colombo Stock Exchange continued to see a bearish sentiment with the index closing in red. For the 11th consecutive session, the market experienced nearly a 5% decline in the ASPI during the month of August. Uncertainty has been dominating the market with the elections ahead. Although the last quarter earnings has improved significantly, particularly within the banking sector and food, beverage and tobacco sector. As we enter the election month, we anticipate this cautious sentiment will continue with high net worth investors and also the corporates likely to maintain their wait and see approach. Currently, the monthly average turnover remains subdued, hovering below 1 billion rupees and is expected to stay at lower levels due to the weak market participation. The uncertainty surrounding the political landscape has dampened the buying interest, But however, there may be opportunities for bargain hunting as some stocks have seen significant price declines during August. And on a positive note, there are a couple of upcoming IPOs, including those from PICME and LTL Holdings, which are expected to draw investor participation and potentially provide a boost to the market.
Sri Lanka's Securities and Exchange Commission said it inked a deal to get a market surveillance system from US-based Nasdaq, giving it advanced technology to detect and respond to market anomalies and potential fraud.
The SEC chairman Faisal Saleh said that the acquisition of this market surveillance system is a major milestone in their regulatory journey. He added that as Sri Lanka's capital market evolves, it is fundamentally necessary to keep their regulatory market oversight mechanisms abreast with global standards and expectations. Further, the chairman stated that their partnership with Nasdaq equips them with world-class technology to monitor the market, enforce regulations in timely manner, and foster a more transparent and investor-friendly market environment. The system has sophisticated algorithms, customizable alert and report generation capabilities, visualization tools, and real-time data analytics with market replays. The SEC conveyed that this new system is scalable to support increasing market activity, capable of processing large volumes of data, and can integrate artificial intelligence and machine learning to enhance its detection capabilities.
Gold prices fell 1% today on profit-taking as investors looked forward to key inflation figures this week for clues on the US interest rate cuts this year. Spot gold fell 1% to $2,336.76 per ounce. It had hit its highest level since April 22nd on Friday. US gold futures settled 1.3% lower at $2,343. Traders are now pricing in about a 63% chance of a rate cut in September, according to the CME FedWatch tool. Lower interest rates reduce the opportunity cost of holding non-yielding gold. Markets focus this week will be on the US Producer Price Index data on tomorrow, followed by the Consumer Price Index data due on Wednesday. Oil prices extended its losses today on expectations for higher OPEC Plus production starting in October, and as signs of sluggish demand in China and the US, the world's two largest oil consumers, raise concerns about future consumption growth. Brent crude futures fell 56 cents or 0.7% to $76.37 a barrel, while US West Texas Intermediate crude slipped 45 cents or 0.6% to $73.10 a barrel. The losses followed a 0.3% decline for Brent last week and a 1.7% drop for West Texas Intermediate. 8 OPEC Plus members plan to increase oil production by 180,000 barrels per day in October as they start to ease their recent output cuts of 2.2 million barrels per day, while maintaining other cuts until the end of 2025. The Sri Lankan rupee has appreciated slightly against the US dollar at commercial banks in Sri Lanka today compared to last week. According to People's Bank, the buying rate of the US dollar has dropped from 294 rupees and 73 cents to 293 rupees and 65 cents, and the selling rate has decreased from 305 rupees and 31 cents to 304 rupees and 19 cents. Now let's take a look at the exchange rates against other global currencies. A short break now, corporate updates right after this. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Indigo, a key Indian airline, commenced their flight operations between Chennai and Jaffna just yesterday. The inaugural flight from Chennai to Jaffna arrived at 3:05 p.m. yesterday to the Jaffna International Airport with 52 passengers and departed with 75 passengers.
The aircraft was welcomed with a celebratory water cannon salute upon the arrival at the Jaffna International Airport, and the passengers were warmly welcomed with traditional dance performances and special gift packs sponsored by the Sri Lanka Tea Board and the Department of Industries in the Northern Province. Jaffna is Indigo's second destination in Sri Lanka after Colombo and marks the 34th international and 122nd overall destination in its rapidly expanding 6E network. This strategic route will strengthen the cultural trade and ties between India and Sri Lanka that have been marked by cooperation in the fields of commerce, infrastructure development and air connectivity. This airlink will also be a cultural and social bridge, fostering people-to-people connections, making it easier for families to reunite, students to access education, and tourists to discover Jaffna's unique heritage. This accessibility also extends to healthcare and cultural exchanges, enriching the lives of people on both sides of the Pork Strait. Customers who wish to plan their travel can book their tickets via the official website www.goindigo.in or through their mobile app.
Sri Lanka's National Development Bank PLC has announced plans to raise up to 10 billion rupees through a debenture issue, marking a significant move in the bank's efforts to strengthen its capital base.
The debentures are Basel compliant, classified as Tier 2 capital, and are structured as listed, rated, unsecured, subordinated, renewable instruments with a non-viability conversion feature. These financial instruments are to be offered at a face value of 100 rupees each, providing a potential investment opportunity for both institutional and individual investors. The debenture issue is set to take place in 2 tranches. Initially, the bank will issue 50 million of these 5-year debentures, and if the first tranche is oversubscribed, an additional 50 million debentures will be issued, allowing the bank to raise a maximum amount of 10 billion rupees. The planned debenture issue has already received in principle approval from the Colombo Stock Exchange. The subscription list for the debenture issue is set to open on the 5th of September, giving investors an opportunity to participate in this strategic capital raising exercise. NDB Investment Bank Limited will be acting as the manager of the debenture issue.
Sri Lanka's DCC Bank PLC has announced it would sell its 50% stake in Equity Partners Private Limited to Hatton National Bank PLC for 7 billion rupees. Equity Partners Private Limited is a joint venture between DCC Bank and Hatton National Bank. The bank said in a stock exchange filing that the board granted approval on the 30th of August to sell 50% of the issued and fully paid up shares of Equity Partners to Hatton National Bank PLC for a total price consideration of 7 billion rupees. With the sale, DCC Bank would be divesting its entire shareholding in Equity Partners to Hatton National Bank. The transaction is expected to be concluded on or before the 31st of October. Dialog Axiata PLC completed the amalgamation with Bharti Airtel Lanka Private Limited under the applicable provisions of the Companies Act, with Dialog remaining as the surviving entity. This marks the official cessation of Airtel Lanka as a corporate entity, effective from the 30th of August, which was last Friday.
As a result, Airtel Lanka's operational performance fully subsumed and consolidated within Dialog financial statements. This strategic milestone represents a significant step forward in advancing Sri Lanka's digital infrastructure, underscoring the combined strength and commitment of Axiata and Bharti groups in delivering enhanced connectivity and more robust digital service across the country. The collaboration between these two organizations brings together their collective expertise, resources, and innovative capabilities, positioning Dialog to lead the way in Sri Lanka's digital transformation. Following the merger, Dialog's subscriber base has surpassed 20 million, further reinforcing its position as the nation's leading telecommunications provider. As the network integration progresses over the coming months, customers can anticipate enhanced services that go beyond connectivity, delivering significant advancements in customer experience, innovation, and digital service. The continuation of Airtel brand within its new structure ensures that customers will continue to enjoy the value and trust associated with Airtel, while also gaining access to the extensive offerings of Dialog.
The Federation of Information Technology Limited signed a Memorandum of Understanding with Trainacate Lanka Private Limited recently to enhance the skills of IT students and professionals in newer IT technologies. The MOU allows FITIS to join the Sri Lankanization project initiated by Trainacate to provide industry-accepted training and certifications in data, security and AI. Sri Lankanization project is an initiative by the Trainacate with the aim of transforming Sri Lanka into a regional hub for newer IT technologies such as data science, artificial intelligence and security. In the initial phase, this project focuses on enhancing the knowledge and skills of 10,000 Sri Lankans in these fields to address the growing demand for technology professionals. Let's take a short commercial break. Global updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Asian stock markets traded mostly lower today despite broadly positive cues from Wall Street on Friday. Traders reacted to downbeat factory activity data from China, which showed a decline for the fourth consecutive month in August. They also remained optimistic about the outlook for interest rates after a report indicated that U.S. consumer prices had increased in line with estimates in July, while the annual rate of price growth was unexpectedly flat. Asian markets had closed mostly higher on Friday. The benchmark Nikkei 225 index closed the morning session at 38,709.88, up 62.13 or 0.16% after hitting a low of 38,670.66 earlier. Japanese shares ended notably higher on Friday. Shell plans to scale back on its oil and gas exploration and development workforce by 20%. Sources said CEO Wael Sawan will expand his cost savings drive to the highly profitable division after deep cuts in renewables and low carbon businesses.
Shell plans to scale back its oil and gas exploration and development workforce by 20%. They say CEO Wael Sawan will expand his cost savings drive to the highly profitable division after deep cuts in renewables and low carbon businesses. The sources added restructuring will see hundreds of jobs go around the world. It will be particularly felt at its offices in Houston, The Hague and to a lesser degree in Britain. The planned 20% reduction is subject to consultations with employee representatives bodies, according to the sources. Shell's oil and gas production division made up over one-third of the company's $28 billion in adjusted earnings last year. Exploration is vital for oil and gas companies in order to replenish depleting reserves and discover new resources. A Shell spokesman would not comment on the reduction figures. Shell shares were slightly up Friday morning following the news. Sawan took office in January last year. He's vowed to boost profitability and bring its share valuation closer to larger US rivals.
And with that, we mark the end of the first bulletin for the week. We'll see you again tomorrow with the latest happenings across the business globe. Until then, I'm Anuradhi Vikramasinghe. Thank you for watching. Have a good night.